Let's look at cons. First off, read this disclaimer carefully and do your good deed of today by liking and subscribing. So, we go to a bonus theme that I called Deep Value. Here is cons. They are in the electronics retail business. So the criteria for inclusion here is that, the price book, price sale, and peg are below 1. And this is as of the 4th of March, 2021. I did look at cons, of course, before making the video, analyzed it, and it is still, certainly in, deep value territory. So 159-ish% rally from the 52-week low, but we have seen a minus 25-ish% pullback. So when I tried to go to their website, my request was blocked. That is most likely because I live in Europe and they have blocked European IPs because of GDPR. But the thing is that at this point, they should definitively make their website available because any analyst in Europe will see this message, which obviously is very, cons should be able to have a fully functional website. Okay, so that's a minus for sure, but let's look at other things as well. So here is the chart, weekly data points. Conn, C-O-N-N is the ticker. I did find these major time cycles that are certainly interesting, but what's even more interesting are these smaller time cycles within. You see here when you look at price and the time cycles, there's not a perfect match, but it's pretty, decent. It is at least informative. There is this key rising phase here, developing that extends into the start of 2022. So that is definitively interesting from, a more bullish perspective. So let's zoom in a bit here. There is a technical pattern developing that could become really, really profitable if it plays itself out, and that is this inverse-ish head and shoulder pattern. It could be that this recent pullback will help form that right shoulder, and that could, trigger a pretty healthy rally. The purple 20-week moving average is currently tested as support. And the purple 20-week moving average, it has also been, solid resistance in the past, which means that it is a moving average that really matters. It has legitimacy. You also here have a situation with the green 50-week moving average pointing upwards, and, eventually it will, likely create a golden crosshair with the red 200-week moving average. And the 200-week is right below us, and that is also, a very key moving average support level. RSI, it is coming from a bit of an elevated level. So that is something we just have to be aware of. When we go here to the daily data points, we have the blue 100-day moving average. Support, 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 support. So it has a very good history of being a nice buying opportunity. The only caveat here vis-a-vis the prior times we were playing with that moving average is that the bears are testing it rather frequently as of late. That is not ideal. You do want the bulls to really step into action when a moving average is tested, especially given that it has been support in the past. So we do definitively want the bulls to rally pretty soon, because the more times a support level is tested, the higher the probability that it will actually break. Looking here at the RSI, we have cooled down to the demilitarized zone. PPO also at reasonable level, nothing like spooky in either direction. Let's explore further. So here we have the seasonality of the stock. So over the last 5 years, we have seen a weakening into October, but you see that performance-wise, September tends to produce a much bigger gain than August. Looking at the last 10 years, then there is that drop-off in strength from August to September. So that is something we just have to be aware of. But when we look at the last 19 years, we see that from August into November, December, there is this clear strengthening of the seasonality. So the percentage of times in which the stock closes higher than it opens, it tends to go up. So that is supportive of a more bullish take. Looking here at Finviz, they draw this diagonal support level. That is, interesting and bullish, and we have broken out above this resistance, diagonal trend line. The price targets are a bit old, so the latest ones we get here is from 2020 and 2019. So we have to be a bit careful about using these very old price targets. But certainly the one from Stephens here is not bullish at all. Compass Point, they have a price target of $23.50. But I think that we just have to go to Sachs because this is just too old. Sachs, however, have a number one strong buy, so it doesn't get better than that. A value score, A growth, obviously doesn't get better, but we do have an F momentum score. The industry rank is in the top 14%, so industry is retail, consumer, electronics. The company it does have some size, but not too big, so $688 million in the market cap. The beta is really high though, 2.59. The beta for the S&P 500 is 1, so yeah, quite the difference. So if I were to sum up my take here for this stock, this company, I think that this looks interesting from a bullish perspective, but we definitively do want to have a line in the sand, and I do think that the blue 100-day moving average is absolutely key. We do want to see the bulls actually come into action here. They have the seasonal reasons to do it, the fundamentals. I mean, it is the style scores were really, really good. So there's no really excuse. So yeah, the primary thesis is bullish, but we do definitely want them to see